petrol price increase, along with several other socio-economic challenges, may have an impact on our import and export trade. Now, joining us to investigate this topic is Matthew Conroy, who's line manager for Sub-Saharan Africa at Maersk. Good morning, Matthew. So we've just heard about the sort of micro effects and the reasons behind this change. Let's look firstly at that import-export scenario.
Yes, good morning. We definitely have seen that really over even going back to the last year or so. Starting with the first half of 2012, we saw quite strong container import growth of about 8%. In the second half, however, of 2012, we actually saw flat growth, about 0% growth. And that really can be related to as you mentioned, the weaker rand, which is contributing to the higher inflation, as well as the petrol prices, and in general consumer good prices going up, the lower consumer confidence, and we have seen a consumer spend dropping, and then of course that will mean we have less container imports.
You mentioned containers as a measure, and how does that measure work? Is it a volume of containers? Literally, you count the containers as a measure of imports and exports. Is it also the value of those containers? You know, when you're really trying to measure what's going on, how do you do it?
It's literally on the number of container imports. So it's not about the value. It's not about the margins and so forth. It's literally about the throughput. And that has been on a decline in the second half of last year. If you want to look at a positive side of it, is that of course if the rate of exchange is going to hurt imports, it's going to help the exports. And we have, if we look at currently year to date, we have definitely seen stronger export growth. We didn't really see the strong export growth last year and take full advantage of that. There was production issues with mining and so forth that didn't necessarily create the demand, and China was consuming a little bit less. So we haven't necessarily capitalized yet on the positive effect of rate of exchange on exports, but it looks to me like that could be what's happening right now in 2013. So that will be positive for the exports.
What's your reading of the news this morning? It's one of those days when everyone's in a good mood, because we've had China saying that they're going for 7.5% growth, they're confirming that target. The US, the Dow Jones at an all-time record, the S&P not far off its all-time record. Markets generally have reacted well, and the Aussie in South Africa up 1.75%. So when you're looking at these kinds of indicators, what is that telling us about container traffic, about import-export activity down the line?
Well, it's definitely positive. We're obviously very much part of the global trade in South Africa. So any effect on China growth, US growth, Europe growth is going to have a major impact and positive influence on the import trade and export trade.
Then you've got
so we're definitely more optimistic today than even a month ago.
And then in the commodities sector, we've got industrial action. We've talked earlier about the platinum sector being under pressure again with Implats in Zimbabwe, but also Marikana. We're very sensitive because of the problems that last year at Marikana with Lonmin. And then, of course, gold coming down on the back of good news in the US. In terms of, they don't transport it in containers, I know, but those long trains look as if they are containers. On the commodity cycles and imports and exports, what's your reading there?
Well, we definitely had less demand, and I think the industrial action had a negative influence on exports second half of last year. But I would say as of this December, at least from a container export perspective, we have seen it pick up by quite a large margin. So it is very much going in the right direction. And I think one of the key things, you know, within the shipping world is the stability on the export demand. If you have if you have 1 month very strong and then 1 month very weak with a fixed capacity, it's quite difficult to maneuver with. So the stability in the export market and specifically with the commodities is extremely important. But right now it does look positive with the strong start we've seen this year.
We also had, you talk about capacity issues, and certainly with the rail lines for iron ore and coal, it's one thing to get it out the ground, it's another to get it to the ports, and once it's at the ports, to get it efficiently onto the ships to wherever they're going, China in particular. What about our infrastructure and the demand for it? So we've had talk about Grindrod, for example, a big shipping company, which is now also a logistics end-to-end company. They've got a very productive productive partnership with the Mozambique government in the Maputo port. A lot of criticism of Transnet that they haven't allowed the same kind of partnership here. Durban capacity, Cape Town capacity, and of course the other ports. What's your sense of demand and supply of capacity in our port infrastructure?
Yeah, I think there is quite a lot of plans with Transnet for infrastructure capital spend, and that's very much welcomed and it's very much needed. As you mentioned, there are bottlenecks within South Africa, whether it be the ports or the rails. So basically, we welcome the capital investment, and we very much work with Transnet and TFR and so forth in order to do it together.